Hello everyone, welcome back to my channel Real Canadian Life. Friends, people are migrating to Canada and the big question is there how we can buy a home because the property market of Canada is skyrocketing. So you have heard about the concept of lease to own. So in this video we will talk about the concept of rent to own a property in Canada. We have a special guest with us. She is the CEO and founder of a company which is called Equity Homes, and she will guide us all the process of how you can rent a property in Canada and then after you can become the owner of that one. So friends, let's get started. So first of all, Amy, give your little bit introduction to our viewers and then after we'll discuss about this concept.
Yeah, no, and thank you so much, Annika, for having me here. It's a great pleasure to be spending the time, share more about what we do at Equity Homes. And hi everyone, my name is Amy Ding. I'm the founder and CEO of Equity Homes. We're a tech-enabled rent-on platform that's helping newcomers accelerate their homeownership dreams in Canada.
Okay, so Amy, so my first question is with you. What is Equity Homes and how did you come with this concept?
Yeah, so long story short, Equity Homes is a tech-enabled rent-own platform where we help our clients purchase home of their choice upfront so they can rent the home from us with the option to buy back later at a guaranteed price, just like lease to own a car. And the reason I started Equity Homes is actually comes from my own personal stories. About 10 years ago, I graduated from school, had 20% down payment, excellent credit, no debt. I went to the bank trying to get a mortgage and the banks actually said no to me. I was on a work permit and they said I need to have 35% down payment. So that experience kind of just stuck with me. Later on, I work at a capital markets. That experience just stuck with me. Later on, I worked in finance, RBC capital markets. I work at RBC Ventures with a focus in prop tech space. I realized the problem I had 10 years ago is still the same for many more newcomers, non-permanent residents in Canada. So I thought, why not take everything I learned to create a new product to make homeownership more accessible for newcomers, which is something really, really close to my heart.
Okay, nice. So due to your own personal experience, you got this idea that if you will create this type of company or like that, so people will get more benefited with the property market in Canada. Oh, that's nice.
Yeah, that's the whole idea. I'm an immigrant. I moved to Canada in 2010, so I'm sure you can appreciate it. Having a place to call our own is huge.
It's a huge pleasure, yeah.
Exactly, because it means us putting down the roots in this country. Right? We are, left our families back home, and we really, really want to be part of this country. And having a place to call our own is a huge milestone. And for us, for me personally, and for our company, Equity Homes, we really, really want to help many newcomers achieve the homeownership dream.
Okay, that's nice. So my second question is now that what is rent to own concept and how it is different from the other rent to own concepts like car or like something like that?
Yeah, you're absolutely right. Like you can rent on lease to almost anything, right? A phone, you pay $50, or a car, you pay $200, $300, $500. And then if you think about it, homes cost a lot more money than the phone, than the car. So in theory, there should be more financing options available just because the dollar amount involved. And on top of that, real estate homes, they're appreciating
every
over time.
year.
So not like the car, the phone you have, guess what? You use it for 2 years, it's probably worth nothing.
It will depreciating asset.
Exactly. So if we think about that as a consumer, if you have the option to buy the home in the future at a guaranteed price, that right to buy the home at a guaranteed price, it could be worth something. Because guess what?
Definitely.
If the future home price is much higher, you can buy back home at below future market value. So it's actually very valuable for consumers to have that option to buy the home at a locked-in price. And that's kind of the idea behind the scenes. Like, we know there's a huge demand because the dollar amount. We know it adds a lot of value to consumers by giving them the option. So how can we create a product that is like mainstream, like where I can create a future people can rent a home as easily? And that is exactly what we're working on. By having the right strategic partners behind us, really believing our vision and providing those type of real estate capital to buy homes for our clients.
Okay, got it. And the next question is, who is the who will be the best candidate for this type of rent to own program? So for example, I'm a newcomer. I came to Canada in last 1 or 2 years. I don't have enough savings to get a home, or I cannot be approved for a mortgage. So what are my options?
Yeah. So rent-to-own program is a great stepping stone for aspiring home buyers who have the cash flow to afford a home but cannot qualify for a mortgage. So what I mean by that is it could be newcomers who work 2 jobs, 80 hours per week with amazing cash flow, but they don't have the Canadian credit history, right? Yeah. Or it could be they're self-employed. I'm sure there are a lot of gig economy workers out there, or even small business owners. It's very challenging for them to get a mortgage because they need to show 24 months of employment, like not even employed, 24 months of income history before the lender can recognize income. And in our cases, we can take a very robust cash flow based underwriting. As long as we feel comfortable as a client, you can afford the monthly rental payment. We have no problem buying the home for you upfront. So you get to move in as a tenant. We will work with you very closely to help you get ready for a traditional mortgage. And when the client comes to it, you can just buy the home from us at the guaranteed price you and I agreed upon initially. So just summing it up, it's a great program. If you have the cash flow but cannot qualify for a mortgage, you might be new to the country, you may not have the PR status, you may not have the Canadian credit history, or maybe you're self-employed, your income can't be recognized by the lenders yet.
Okay. So it's a very nice concept that if I don't have the enough down payment or enough savings at the time, even I also become a landlord or a homeowner. Yeah, that's a good concept.
Yeah, that's our goal. We want to lower the, that's definitely our vision. We want to create a new path to homeownership and make it more accessible, especially for the underserved customer segment, i.e. newcomers and non-permanent residents.
Okay. Yeah, that's nice. Okay, so now our audience will want to know that do we need to choose a specific house from a list of houses, or a customer or consumer can select a home? So who chooses the house, as well as what is the process to get enrolled for it?
Yeah, so that's a great question. In our rent-to-own program, our clients get to choose whichever home they want us to buy, as long as within a budget. How the process works is they come to us first, so we can assess their eligibility and getting them fully approved, give them a budget. Then they go out home shopping with the typical real estate agent. And once they find a home they like, we come in, we'll buy it upfront. We have some criteria in terms of what kind of homes we can buy. Generally, we buy homes from $150,000 to $600,000. So that's why we don't do it in Greater Toronto area, because you can't buy anything for $600K. And it has to be freehold properties, i.e. you own the land. It's not a condo, apartment where you had to pay fixed monthly maintenance fee. On top of that, generally we need the homes to be habitable, because we don't want to buy a home with a, cracked foundation, structure issues where nobody should be living there. And so like very standard stuff where we want to buy good quality home. Our clients can see themselves living there for the next 3 to 5 years, and with minimum major repair maintenance expenses coming up possible.
Okay, yeah. So earlier I was thinking that if the company is having a list of some selected houses and customers need to buy anyone from that, but now I got to know that customers have the choice. Whatever the house they want to buy, they can just go to the market and then they need to ask for you.
Exactly, because we really want to empower our clients, because when you do a rental, it's a major decision. I really want our client to be able to see themselves living in the home for the next 3 to 5 years, because this is going to be their home where they're going to raise the kids, they're going to have all those great memories. We want to make sure they have as widely selection as possible. And on top of that, hey, it's your home, right? Whether the seller wants to do rental, it doesn't matter. We have the money. We will buy the home from the seller directly and enter into rental with our clients, just like a typical home buyer.
Got it, yeah. Okay, and how long this program is running from rent to own a property?
Yeah, so our standard rent to own contract is 3 years. However, our clients can buy back the home at any time throughout the 3-year period of time, the contract. It's actually cheaper if they buy back earlier, because
Okay.
our future buyback price is based on a fixed annual price escalation.
Okay.
So the sooner they can qualify for a traditional mortgage, the cheaper the future buyback price will be. And we really, really work closely with our clients and help them get over whatever hurdles they needed to in order to qualify for a traditional mortgage. And we don't have any, penalty fees for early buyout, nothing at all. My goal is to help clients transition from renting to owning as quickly as possible. And so far, we have amazing track record. 80% of our clients have been able to buy back homes successfully in 18 months on average.
Got it.
So much, much faster than the 3-year contract.
All right. So now I have also one question, that is there any particular criteria for the consumers who wants to buy a home? So for example, I should have a minimum income, or my yearly income should be like this. I should earn around 100K or 80K, like that.
Yeah.
Is there any fixed family income or any particular job segments are eligible for this program, or what are the criteria for the people for the low income budget or like that?
Yeah. So from our consumer, like the minimum requirement perspective, we do need our clients to be fully employed, at least one family member, because
Okay.
we need to see you that have steady income coming in. And depends on the city where the startup home price range. Generally, we need a minimum 50,000 annual household income.
Okay.
And on top of that, we do need some down payment from our clients. It could be as low as $5,000. And the credit score, it's like the minimum credit score is 500. However, if our clients have no credit history, no issues at all. We can always make exception. On top of that, our clients cannot be in an active consumer proposal bankruptcy, because you need to finish those before you can think about ownership.
Okay.
And on top of that, we generally require you to have good cash flow. So that means you in cash inflow will be able to cover all your expenses with surplus, and you being able to make your consistent rent payments historically, really, really demonstrate the ability to afford the rental on a monthly basis.
Okay, yeah, that's good. So consumers needs to give a low down payment like $5,000 to get started. And one more thing, that what if the consumers don't want to buy the house after 3 years? So what are the options for them?
Yeah, that's also another great question. When I started the company, we know we want to give our clients the flexibility as well, because everyone's situation could change, right? Like you may need to move to another city, another country, you never know. So when we designed our rent-to-own program, we specifically made it an option to purchase, not obligation.
Okay.
So what that means is our clients can choose to not exercise the option, walk away from the home, no issues, no question asked. We actually were refunding their down payment savings minus a penalty fee.
Okay.
Whatever money is left, we give it back to our clients. They move on with their life. And we will be stuck with the home. We may find another rental client, or maybe we may sell the home in the open market. On top of that, I always tell my clients, sometimes even if you may not need the home, but if that home is worth higher than the contractual buyback price I agree to sell to you, sometimes it might be better off for you to buy back the home from me regardless, and then just sell the home in the open market for profit.
Oh, okay. Yeah, there is also a nice thing. And one more question arises from this. So for example, after 3 years, someone wants to buy the house, but they don't have that financial ability to eligible for the mortgage, or they got some uncertain issues, like they lost the job, or some family issues are there. So what are the chances for those kind of consumers?
Yeah, again, it's an option to purchase. So if for any reason our clients cannot buy the home because they don't qualify for mortgage, I always say it shouldn't be a surprise, because we already been working very, very closely together. That being said, we do understand things might happen, and we want to be as flexible, as accommodating as possible. So if needed to, let's say it's a temporary situation, you just need an extra 6 months to get back up, then maybe we'll extend the term, the contract, by another 6 months. We won't extend the contract for another 3 years, because I wanted my clients to know, there's a deadline, there's a timeline. You don't have all this amount of time to be able to get ready, because the sooner you buy back home, the cheaper you will be. That means that absolutely worst case scenario, our clients can still walk out. They can walk out, choose not go ahead with the transaction, they cash out their savings minus whatever penalty fee, and then they move on with their life.
Okay, all right. Yeah, that's also beneficial for them also if they have uncertain situation in life. So Amy, as you are working with real estate market from a long time, so please give some idea about what are the major challenges right now the Canadians are facing to buy a house, and what type of properties they can go for rent to own a house program.
Yeah, I mean, depends on where you live. There are different challenges. Obviously, if you're in the GTA, GVA, Greater Toronto, or Greater Vancouver area, generally a detached home goes over $1 million, sometimes even $2 million.
Yeah.
It's very unaffordable. In order to be able to afford it, like the income you need to have is really high, and obviously, even if you are able to get a mortgage, your monthly payment is going to be really high as well.
Yes.
That being said, if you're thinking about other geographies, let's say outside of GTA, GVA, especially in the markets we operate, right? Northern Ontario, Saskatchewan, Alberta, and Manitoba, where the average home price is a lot more affordable compared with Toronto, Vancouver.
Yeah.
But they also have their own set of challenges.
Yes.
For example, obviously we all know we're living in a high interest rate environment, so it's much harder to qualify for a mortgage.
Yeah.
And also the mortgage underwriting system in Canada is a bit of antiquated. Especially as I mentioned for newcomers, right?
Yes.
The status, the lack of Canadian credit history, the self-employment nature. It's very difficult to get a mortgage. It doesn't mean they can't afford it. Some of them make consistent rent payments that are higher than the cost of owning a home, but they still cannot qualify for a mortgage. So that's kind of the sweet spot where we come into play, where, you know what, I know you have the cash flow, and I know I can help you get ready for mortgage in 3 years time frame. So let's work together.
Yes.
Let's let me buy the home of your choice up front, so you can start living in the home. And on top of that, I think the other part, some of the audience might appreciate it if they try to. In certain markets, not that easy to find a home for rent.
Yes.
It's like even
It's
if you want to
challenging,
rent. Even if you want to rent a house to rent, especially those come with the families, the kids, right? They can't be stuck in apartments. They need the backyard. They need the privacy. They can't even find single-family homes for rent. It's very challenging.
Yes.
So now through our program, we're buying those for sale homes and make them available for our clients as temporary rental until they can qualify for mortgage. And then they transition from renting to owning.
Okay, all right. And my last question to you, that is, for example, someone wants to go to the some financial institutions like banks. They want to apply for the mortgages, and if we compare your program as well as the mortgages, so what are the basic difference and what are the disadvantages with rent to own program?
Yeah. So if you go to the bank, get a mortgage, that's like a typical home buying process, right? What that means is your own title. Your name's on the title, you're the buyer.
Okay.
Obviously, you need to meet all the criteria. The income, the credit, the down payment. It's very strict.
Yes.
To be able to qualify for mortgage.
Yeah. And it's very difficult right now due to the high interest rates.
Exactly. And so if that's option, let's say you do qualify for mortgage, I'll tell you, yes, okay, you should get a mortgage. You don't need me.
Okay.
You don't need me. If you can qualify for mortgage, you don't need me.
Okay.
And you have all the income, down payment, everything. However, if that's not an option, but you do have the cash flow and you do need a home, then let's talk. So when you do rent zone, when we buy the home for you up front, it's our name on the title.
Got it.
So we become your landlord essentially. You move in, every month you pay us rent.
Yeah.
That rent amount is roughly in line with the mortgage cost, the property tax, and landlord insurance. Because if you own a home, you had to pay the property tax, landlord insurance.
Yeah.
But when you do rent zone, we had to pay for all of that. So that cost is actually relatively in line. And then in addition to the rent, you do pay a premium that goes towards the down payment. Because the idea is to help you save more and more towards the down payment you can use to when you do qualify for a mortgage. And also it just gives you the flexibility. In the event you change your mind, you can walk out, no issues, right? And if even in the worst case scenario, let's say home price goes down 20-30%. If you own the home, you're on the hook, right? The home you may bought for $300K, now it's worth $200K. You just lost $100,000. In our case, when you do rent home, it's optional obligation. You walk away. You whatever the maximum you're gonna lose is the penalty fee. And we're gonna own the home.
Got it.
We're gonna lose that $100K ourselves. However, if home price goes up, you bet.
If the price is increasing, there is a profit for the consumer and the loss is yours.
Exactly. So it's very asymmetrical risk return profile for consumer. You have unlimited upside.
Got it.
Very limited downside. For company like us, it's the opposite. And usually as an investor, you're trying to go with unlimited upside, and very limited downside.
Very limited downside, yeah.
Exactly. So that's why it's like this is a really good program for consumers, assuming they are in this financial situation to be able to take home something like this. At the same time, they're fully aware of all the risk associated with the rental program, and then they just have to make that decision: is this the right option for them at this time?
Okay, yeah. So it was very nice to get all the insights of this rent-to-own concept in Canada. And friends, if you are interested to just view about the things, there is a Google link form is given in the description box. So you can check and fill the details, and then you can get to know about what are your chances to buy a house with this program. Okay, so Amy, so it was very nice to get all the insights of this concept, and I hope our audience will get benefited from this. And who are interested for this program, they will contact you soon.
Please, and we will put our contact information on the link below as well.
Yeah.
So feel free to reach out to us, check us out on our website, raquityhomes.com. And if you guys have any questions, feel free to send us email or give us a call.
Okay, yes, sure. So friends, if you like this video, please hit the like button, share with your friends and family, and do subscribe this channel. Thank you for watching.
Thank you, everyone, and thank you for having me here.
Okay, yeah, thank you.